A very warm welcome to one and all for the Asian Paints Investor Conference for Q1 FY2023 results. Today in the panel, we have Mr. Amit Singhal, MD and CEO. We have Mr. R.J. Jeyamurugan, CFO and Company Secretary. And we have Mr. Parag Rane, GM Finance. May now request Mr. Amit Singhal to take you all through the presentation. Mr. Amit Singhal, over to you.
Good evening and welcome to the investor conference for the Q1 financial year 2023. You can just see that how much trouble we have gone for the first quarter results. So this is an indication in front of you. Going ahead, first of all, just to reiterate that at Asian Paints, we have been delivering joy since 1942. We exist to beautify, preserve, transform all spaces and objects, bringing happiness to the world. And that's the key kind of objective which we have been kind of following for decades. Obviously, as you know, this is a disclaimer for the overall presentation today. Coming straight to the results have been quite exceptional. As you can see, the overall quarter has gone off quite well in terms of the overall performance, which is there. The total volume growth for the quarter is 37%, which is one of the highest volume growths which we have seen in the last 6 quarters, so to say. We have a value growth which is also 59%, which is aided by both a better mix as well as the price increases which we have taken in Q3 and Q4 earlier to that extent, which is the realization which we are getting. The good thing is that when we compare it with the normal year, which is the FY19-20, which was the pre-COVID year, so that you can see in the 4-year CAGR, both volume and value CAGRs have been clearly 20%, which clearly shows that this is a very, very healthy overall growth which we have been able to get, and it is just not over a lower base to that extent. And this has been the consistent strategy of the company in terms of driving the top line in a very, very strong manner, and that is what you see the results coming out for you. I just referred to this, so if you see consistent kind of overall growths which you kind of see, you can look at the overall double-digit volume trend which is coming in terms of this overall. The percentage represents the CAGR numbers which you are seeing overall. So consistent volume growth which is coming, and I would say that in a scenario which is currently there, getting a volume growth is a very, very clear indicator in terms of possibly a good performance which the organization is putting forward as we kind of go forward. Coming to some of the details of the overall performance, one thing which we have been seeing in Q1, which is a trend which is continuing for Q4, is that the T1, T2 centers are continuing to grow faster than the T3, T4 centers. The economy range is also leading the growth in T3, T4 centers, but the Prelux, which is the premium and the luxury range, is growing very well in T1, T2 centers, giving us a very better mix to that extent. But clearly what we are seeing is that in T3, T4 centers, given the price increases which have taken place, there is a little bit of a down trading which is happening towards the economy products, where is the growth coming in some of those centers there. The other great thing which we see is that the projects institutional business is on a very, very strong trajectory. We are seeing growths coming from the builder construction segment in a big way. We are also seeing from the whole area of the government spending on infra projects and the factory segments, and therefore it also continues to nudge our entire growth in waterproofing and construction chemicals in a very big way overall. And this is something which we see geographically across the country to that extent, and that is why we would say that this seems to be a fairly strong trend which we think will continue. When you look at overall from the point of view of our newer categories of waterproofing and adhesives, both have been growing at exponential rates for the last few quarters, as we see, as it is in the case in this quarter. Overall, the distribution footprint, which we have been kind of telling you all about earlier, is expanding at a fairly staggering rate, and we have added more than about 5,000 retailing points in Q1 itself, which is itself a fairly big number in terms of the way it is. The other big parameter which Asian Paints is using going forward is innovation. And when we say innovation, this is innovation based on patents which have been commercialized, and therefore we have launched about 10 new products in Q1. So today, if we see that in the entire market, we have close to about 40 unique products which almost no competition has, and almost about 300 unique finishes as far as textures and finishes which kind of come in. And that's the kind of innovation which we are continuing, which we think is very difficult for any other competitor to match as we kind of go ahead. Just to give you an glimpse, if you see some of these products which have come in are by itself very strong products. We are launching an anti-insect enamel. There is advanced PU enamel. PU is a latest technology at the high end. We are launching a high quality, high end glitz matte product which is there, and we're launching a full collection which is called the Lux collection, which is coming in royal place. Some glimpses of the finishes. The finishes just look brilliant, and this is really the gateway of the world which we are kind of getting to India in terms of the kind of finishes which look like granite and are really very, very amazing, and they can be done with stenciling as well. So I think some amazing kind of standout products, especially at the top end, luxury end, and the premium end in terms of what we are kind of taking out. So when we come to the home decor business, in this business, what we are seeing is, again, as we are saying, a lot of strides have been made overall. So this is a business, just for your information, we are moving from the share of surface to the share of space within the homes. So it is a transition from saying not only on the four walls, but between the four walls. And if you look at one of the areas which we have looked at propagating this decor is our Beautiful Home Stores, which is decor under one roof, where we offer a range of categories: kitchen, bath, sanitary, lighting, tiles, flooring, etc. And overall, we have about 31 stores operational across the country. We also have a service which we call as the Beautiful Home Service, which is there where we offer a personalized interior design. And I think this is something which has been growing at a very strong pace and got traction. It is offered in about 9 cities. We are adding a lot of ranges and categories to our home decor proposition. We have added now rugs as a proposition which has come to our overall decor portfolio and aligned with the organization called Jaipur Rugs there. And we are inspiring the entire model through our central digital engine, which is called the beautifulhomes.com. So digital is a very strong part of this foray, which also takes into the whole area of the Gen Z and the millennial crowd, which kind of comes in a very strong way as we kind of go forward. We see the kitchen and the bath business like I have showed you. So if you look at from the gross margins, just for your information, if we compare with obviously the margins position overall, if you look at sequentially, yes, the margins have come down a little bit from 39.7 to 37.9 because we saw almost a 6% inflation in Q1 over Q4. And despite the fact that we had taken 2% price increases during the quarter, definitely the inflation was far outstripping. We needed to balance the overall price increases in the market so that the price elasticity should remain to that extent in terms of the overall position, and that is why we took a slightly balanced price increase overall. When you compare it with an equivalent quarter of last year, which is Q1 of financial year 22, that is also was about 38.9. So we were a percentage lower as far as overall the gross margin picture is concerned. As we kind of go forward, despite all this, when you look at the standalone financials, it is very clear that the performance has been very, very strong. You have a net sales growing at about 60%. You have a gross margin growth of about 55% at an absolute level. The PBDIT is also about a 65% growth. PBT is 73% and PAT accordingly is at about 71%. But the good thing obviously is that the PBDIT margin has improved from 18.7 in Q1 of last year to 19.4 in the Q1 of the current year. And that is something which is a very strong effort which has gone into cost optimization, efficiency measures, which we have kind of taken despite the higher inflation and the gross margins being lower to that extent. And that is something which has been a very, very strong zone in terms of what we have kind of looked at overall performing. So I think that's a good trend in terms of what we see in terms of the PBDI margins improving. And that is what we hope to kind of retain as we kind of go forward. Coming to the overall consolidated financials. So overall, when we see here again, the standalone top line was slightly better than the other businesses, and that is why the overall net sales here is at about a 55% gain. But if you look at from the point of view of both PBDIT and PBT, it is clear that the other businesses, because of AP Global doing quite well compared to last year, the growths are much higher here in terms of 70% and 84%, which you clearly see in terms of what has been delivered overall. Even the PBDIT margins have improved by 1.6% over the Q1 of last year. So overall, I think all businesses doing quite well, fairly healthy numbers in terms of what we are seeing. And I think that is something which is propelling the overall growth of the company. I'm sure you're looking at finding out what's our outlook. I think as we go ahead, we are seeing demand conditions being stable. As I said, that the consumer sentiment in this quarter was also quite good. Overall, we see fairly okay growths in rural and urban markets to continue. Our focus on delivering top line is something which is very, very strong, and this focus will continue. And we will keep on focusing on both volume and value coming across, because that is something which is one of the clear objectives which the organization wants to drive. Overall, when we see the advance in monsoon has been quite good. Overall, some small deficits here and there, but we feel that the overall monsoon should be normal. And I think that will have a good sentiment in T3, T4, and therefore the demands in T3, T4 cities should improve further as we kind of see. Yes, inflation is a big worry at the moment because while inflation stabilized in Q4, we again saw a resurgence in Q1. I think the overall macro environment situations are again very, very unpredictable as it kind of looks. Over and above, the rupee depreciation is also a cause of worry. So in all, I think the inflation is a cause of worry in terms of what we need to kind of watch out for, and demand is not that much of an issue as we kind of see. And especially when we look at the disturbances which are happening in some of the key markets and the forex changes, I think Sri Lanka, Bangladesh, Ethiopia, and Egypt are facing some headwinds, and that is something which we will have to take into stride. But overall, I think the direction seems to be good. We seem to have left COVID behind, and therefore I think the situation appears fairly good in terms of overall growth as we look forward. Just a bit on in terms of our whole ESG initiative, which is all about our sustainable journey, which is part of our Asian Paints Charter. We looked at various areas in terms of environment, social and governance, and you can see these areas right up there, which we follow very stringently and which you would have read in our the annual report which came out this year. And if you look at some of the benchmarks and the landmarks which we have been able to achieve are very, very strong. So whether it is the case of water replenishment, whether it is the case of the whole area of RE, which is the electricity which we are able to kind of generate, or it is about effluent reduction, or it is the hazardous waste disposal, all areas have been very, very stringently kind of taken. We have been working on with the Green Pro certification for almost 187 of our products, and that's something which is a good achievement. And in the social area, we continue in terms of the work which we have done last year, about 3.75 lakh trainings which we have been able to impart, and almost about 2.7 lakh beneficiaries of the health initiatives which we have kind of taken. So a very strong body of work which is happening in all these areas which are there. That's all from us, and thank you so much, and we are now ready for your questions. Thank you.
Good evening, everyone. Request all participants to kindly rename yourself with your name and company name. Today we have participants joining on Zoom video platform and also via telecalling platform. Requesting all participants join via Zoom video platform. Please use the raise hand feature to ask a question to the panelists. Kindly unmute when given a chance to ask a question. Please say your name and company name before asking a questions. Participants connecting via Zoom video platform can post their question on the chat box too, and we will ask on your behalf. Participants joined through toll-free numbers, please press *1 to ask questions to the panelists. Please say your name and company name before asking your questions. We now have our first caller online with us via Zoom. Mr. Abneesh Roy, request you to unmute yourself and ask your question.
Yeah, thanks. My first question is on white teak. So, you've seen very sharp number versus the full year. So, is there a seasonality here, and is the growth coming because of addition of the distribution, or is it because it's doing well on its own?
So we have used multiple areas to kind of take the white teak business on. One, the company-owned stores. We are increasing the company-owned stores from their current number of 10 to further stores, and some numbers have already got increased. We have also introduced white teak in our Beautiful Home stores, which are a total 31 stores now to that extent. And we have now expanded the whole design and the range which we are offering in white teak. Some very good work which has happened in all that space. So we think this business which we are getting is more because of the fact that there's a larger distribution now available. People have more access. At the same time, we are also focusing kind of a level till a point of time. While we are taking price increases, we have announced another price increase of about 0.5% in Q2, and we will take further calibrated price increases going forward. But I think we are not in a situation where the environment is stable, and I think the inflationary kind of environment will continue. But I think the company, by focusing with respect to its initiatives on sourcing, formulation, and cost efficiencies, would kind of really see that we are able to deliver good top line growth, at the same time good PBDIT margins.
So then this just the other bit on, continuing with that theme that you expect volatile input costs, would you see signs, are you concerned about decorative demand weakness creeping in because of this inflationary scenario? Or is the near term commentary still remaining, especially July, for example, continuing to bullish? That's all from my side. And lastly, before, if I don't get a chance, I wish you get well soon. I could see the hand. That's all. Thank you very much.
No, thank you for the concern. Overall, what we see very clearly is that, the consumer demand is definitely a concern which is there in our mind. But, what we have seen in Q1, that after taking almost about increase of anywhere between 25% to about 28%, consumer demand, we have been able to really kind of see that the demand is there. The marriages season is quite big for us, and that is something which seems to be continuing. There seems to be obviously a pent-up demand for the last 2 years of COVID, whatever you say in the market. Overall, the housing sector is kind of, I would say, booming overall. There are a lot of real estate market is going. The construction market is also up in terms of this thing. Government spending on infra is up. Given all this, what we are seeing, we are also trying to balance our price increases, as we said, and we are taking very measured increases to that extent, so we don't upset the consumer demand going forward. So I think we are pretty hopeful that in this balancing act, as we kind of go forward, while the environment will remain inflationary, we will try to pass minimum kind of increases as far as the customer is concerned, and would focus clearly on consumer demand being there in the market, because we would really like to drive the top end of the market in a big way.
So thank you very much.
Thank you, sir. We would request everyone to limit your questions to 2 max. We now have our next caller online, Mr. Mihir Shah, via teleconferencing. Request you to unmute yourself and ask your question, please. Mr. Mihir Shah, we can hear you.
Yeah, okay, thank you. Thank you for taking my question, and congrats on a strong set of results, sir. So I just wanted to check with you, is there any one-off in the sales or any case of inventory fill up at the dealer end, as in, when 4Q was there, they did not purchase as much, so they had to purchase more than normal in the first quarter. So that's one. And supplementary to that is, if you see the kiloliter volumes sold in this quarter, is it a sustainable one for the remaining part of the year? Because historically, we've seen 1Q sales in normal years to be one of the lower versus the other quarters. So assuming that if you've done this, a very large part of kiloliter sales this quarter, you should do much more than what you've done this quarter in the remaining part of the year. So that's my first question.
Okay. So as we see it, going forward, we see that, the kind of sales which we have been able to get, even in terms of the volume level overall, I think has been quite good. There is no excessive stocking in the market, which we see very clearly, because at Asian Paints, I think we believe that, the turnover of inventory at the retailers end is very, very important, and we should not be really looking at very high inventory levels at the retailers. And I think that is why possibly we focus on servicing so much. So I think it is very clear that there is no increase of inventory at the retailers end, which has kind of gone ahead. And typically what happens is that July and August are the months of stocking, which really happens depending on what time is the Diwali. to that extent, and therefore I think it is devoid of any kind of inventory dumpings which are there to that extent. Overall, what we see is that quarter one, if you look at from a CAGR perspective, I think is about a 20% volume growth from 1920, which is there. And I think going forward, other quarters, we are also looking at saying that we can maintain a double-digit kind of CAGRs over the normal year, which is there, is what is the kind of approach we will have. It will all depend in terms of how consumer demand pans out and how possibly the B2B business also kind of really grows overall. So to that extent, I think, overall, if everything goes well, it should be a good growth across the quarters as we see forward.
Thank you, sir. My second question is on margin. So how should one think about margins? Can one say the margins have bottomed out in the first quarter? I understand the, single-digit inflation that you're seeing, but the price increases should ideally make up for that. So that's, one, and margin should improve from first quarter onwards. And secondly, on the current margin structure that we have is quite far from the long period average of about 43 odd percent. I'm talking about gross margins. So do you see margins going back to those levels, or this would be a new normalized margin band that the company is working with?
So overall, as far as gross margins is concerned, the entire index totally depends on the inflation going forward. Okay. So I think we are calibrating our price increases accordingly to that extent, and we are taking price increases only if it becomes a very clear indicator to us that we need to kind of take a price increase to kind of push up the margins to that extent. I feel that the overall gross margin range for some time might be in the band of about 38 to 40. As I see it, I don't see it kind of really going up to 40 to 43 levels immediately to that extent. I think we are some time away from that as we kind of go forward. Till the time we see that the macro situation is improved and we are in a normal kind of a situation, crude comes down, raw materials kind of soften. I think we are a little bit far away from that, but I think currently we should kind of live it in that band of maybe 30 to 40.5 kind of a overall gross margin band.
Got it. Thank you so much. And lastly, if I can ask on bookkeeping on CapEx, and wish you a speedy recovery, sir. That's all from my side.
Okay. On CapEx, what is the specific query?
So what is the CapEx outlay that we have planned for this year and next year?
You want to answer that?
Yeah. So for the year, we are putting a number of close to about 800 odd crores from a capital outlay point of view, most of it going into our brownfield capital expansions.
Thank you for that. And wish you a speedy recovery, sir. Thank you so much.
Thank you.
Thank you, sir. We now have our next caller online, Mr. Richard Liu, who is online with us via Zoom. Please unmute yourself and ask your question, sir.
Hi, good evening. Can you all hear me?
Yes, we can hear you.
Thank you. Just got two questions out here. One is on the outlook slide. You mentioned out there that Q2 inflation is estimated to be low single digit. Is this Y on Y?
Sorry, your voice
But Parag, if I look at the headline numbers for TiO2 and crude, right, which are, I guess, two of your the major components of your basket. One is really talking about a figure of about 50% for TiO2 and maybe still about 70% for crude. Now, how are you able to manage with just about a 25% negative?
Yeah. So, Richard, I think we are losing you in between, but I will still try to answer it. So while you are saying that TiO2 and other things have softened to an extent, but in our sort of raw material basket, what we are seeing is including TiO2, and while crude has dropped a bit, the solvent categories has moved up quite significantly. We saw that kind of an inflation hitting us even in Q1 of current year. So really the linkage between crude prices, the headline crude prices coming off, and some of our consumption prices not showing that kind of a trend, I think that still exists. So we'll have to sort of live with that as we go forward.
No, but I'm talking the other way around. I'm saying that the headline inflation is actually more than what you indicated, despite the softening.
No, overall, see, there is always, the lag in terms of the overall prices in terms of what we see. So currently, in terms of whatever softening which we are seeing, which is there, possibly that is indicative of some kind of a lower inflation as we have seen in Q1 over Q4 to that extent. So I think what we are seeing definitely is that yes, there is softening in terms of the overall level, but the inflation is still there to that extent in terms of what we are calculating. So I don't think so you should go by the general overall parameters which you are seeing in terms of increases. What we are saying that there is a 6% inflation, and rutile being a very, very strong contributor in terms of the overall raw material, you could link that a large part of the inflation is also coming from rutile.
And so if I go by the fact that you're talking about mid-single digit Q1Q inflation, and your incremental price hike is just about 0.5% that we've taken in Q2.
About 2% in Q1.
No, in July.
Okay.
Right. So you're talking about a low single digit incremental raw material inflation, 0.5% incremental price hike. Are you saying that your gross margin in Q2 will be lower than Q1?
So see, Abhi, if you see the Q2 is still not over in terms of what is going on. So we are still kind of monitoring the situation. So when we say that we are expecting a lower digit inflation number, we still don't know whether it is going to be at about 1%, 1.5% or 2% kind of a zone. We are estimating all that, and there could be, depending on what is the kind of inflation, what is the kind of other efficiencies we are getting, we might take more calibrated price increases as we go forward.
Okay. And second is this white tea turnover of 20 crore, that is included in the consolidated revenue for this quarter.
That includes what, sorry?
The white tea sales of 20 crore. That's a part of the consolidated revenue that you reported.
No, Richard. So in white tea, we have a 49% stake, Richard. So from a top line perspective, it doesn't really get consolidated, but the profit get consolidated in our overall profits for the consolidated results. Yeah, correct.
Correct. Thank you very much. I wish you all the best.
Thank you.
Thank you, sir. We now have Latika Chopra, who's online with us through Zoom. Please unmute yourself and ask your question.
Thank you so much for the opportunity. My first question was on the B2B business. This has been growing quite strongly for you. So if you could share, what is the salience of B2B revenues in your standalone decorative business? And is there a very big difference in the 4-year CAGR that you've shared between B2C and B2B? That was the first question. And the second question was, again, just trying to understand this strong demand better. Any thoughts on, it seems your market share gains have probably accelerated in the last few quarters. How much of this will you attribute to distribution expansion, in semi-urban rural areas? Any thoughts there? Thank you.
So first of all, if you look at the entire B2B business, today I think the business varies from anywhere between 15 to 20% of the total business in terms of what we do, in terms of the contribution which kind of comes in. And today, the business is something which is very well distributed across the country, and it comes from various segments. So whether it is the builder or the construction segment, which is largely there, or it comes from the cooperative housing societies, or it is from the direct sales to factories and government and so on and so forth to that extent. So overall, this business has been growing overall fairly well for us to that extent. And largely, I think here the key point has been the quality of our products, the prepositions, what we are able to offer to the various segments, and also along with us, the entire waterproofing business. We have been able to really give a very, very strong preposition to the market in terms of looking at the overall project sales doing extremely well for us overall. So that's, I think, the key reason in terms of why the overall projects has been growing at a very, very strong chip. Sorry, what was the second question? Sorry, what was the second question, please?
Yeah, sorry. Okay. My question was basically on some flavor on the distribution reach increase. Is that
okay? Yeah.
driver of share gain?
So what we see is that overall there has been good performance due to a virtue of many reasons. One reason what I would say is that overall the brand has done quite well. We have been spending a huge amount of money on the marketing in terms of furthering the corporate brand, and also looking at in terms of various strong prepositions which kind of come in. And I think today we have a decent spend with respect to even the digital in terms of what we are doing in terms of getting the new age customer in a very, very strong manner. As far as distribution goes, we have been expanding the network very, very aggressively for years to that extent. And I think we have just looked at putting a little bit more aggression on that in the last about 2-3 years to that extent. And overall, we feel that that is an inherent part of our overall strategy in terms of looking at saying that we could kind of reach to every part of the growing country the way India is to that extent. So I would say that we can't figure out only one factor, that it is just because of distribution that today we are doing better. But I think it is the combination of factors in terms of looking at better products, innovative products, good marketing, good servicing, and the extension of our retailers across the country.
Thank you. Thank you so much.
Thank you. We now have Mr. Shrenik Bachawat through Zoom. Request you to unmute yourself and ask your question, please.
Hi, sir. Thanks for the opportunity. So my first question is, I would like to understand if there is any major change in the product mix in this quarter versus last 2-3 quarters for us.
So overall, the product mix was much better as we saw it, and we had a good quantity of overall emulsions which sold better in terms of the mix, and these emulsions were both from the economy segment as well as from the premium and the luxury segment in terms of what we were able to do. We also sold good quality of premium and luxury products as far as our overall waterproofing and wood finishes business goes. So overall, I would say the product mix was much better.
And sir, is there any specific geography which has been doing very good for us recently? And if we take for a longer term perspective for the next 5 to 10 years, what do we take as a volume CAGR target for a company?
So overall, if you look at from a geographical variation, when you are growing at almost 50 to 60%, I think all geographies has grown very, very well for us. I can only say that specifically if I look at the geographies of West and South in Q1, they have kind of done possibly incrementally much better in terms of what we would kind of see overall. As far as overall, today any organization would like to pursue, we would obviously like to pursue very, very healthy volume growths going forward, because that is a strong indicator of how the organization is going forward. And we are definitely looking at saying that one of the areas we want to kind of continue is to kind of keep on looking at double-digit volume growth figures.
Thank you, sir.
Thank you. We now have Mr. Tejas through Zoom. Request you to unmute yourself and ask your question, please.
Hi. Thanks for the opportunity and congrats on a very good set of numbers. So a couple of questions. First, just an extension of an earlier question on dealer addition. So 5,000 dealer addition in a quarter is a very robust number. Just wanted to get some sense on profile of these dealers. Are they part of the industry and we are gaining market share against existing brands on the dealership network, or these are like virgin dealers getting into the industry from some other larger basket of home building or other adjacent industries?
So overall, when as Asian Paints we look at the entire distribution network, we look at all kind of retailers, because today we are dealing with the retailers who are into hardware, we are dealing who are in electricals, we deal with people who are in cement and steel, we deal with the people who are in PVC pipes and so on and so forth, or are in other building material stores to that extent, or even our plywood dealers and so on and so forth. Because today it is very difficult to define that a retailer will deal only in one category. Normally what we are seeing is that retailers tend to kind of get into multiple categories if they are in the whole area of building to that extent, and therefore what we keep on exploring is that actually opening retailers more from the point of view of reach to the consumer. So we look at clear clusters which are coming up where possibly our reach could be better. This could be in the existing cities, it could be in the suburbs, it could be in the newer towns, it could be in some of the upcountry low population towns to that extent. And I think the overall range is pretty wide in terms of what we look at. The idea is very clear that as Asian Paints we should be able to give him a profitable kind of venture which kind of really leverages his whole business and kind of really drives us towards growth. So I think we look at all type of retailers in terms of a choice of extending the distribution.
Sure. So second question pertains to our share of wall to share of space vision. Now, historically, lifestyle categories brand and successful brands have not been created without either controlling the retail experience, which is a retail network, or controlling the back end, which is manufacturing. So as of now, our model seems to be devoid or rather not committing capital to the either end. So as we make a plan for next 5-10 years, how are we thinking about this evolution in our business model?
Actually, contrary to what you are saying, we are focusing on both the ends. We have all the businesses where we've got into our own manufacturing, be it kitchen, be it bath, be it lighting, be it in terms of now windows and doors, or it is in terms of furnishing to that extent, and therefore it is all coming from in-house in terms of what we are making. Either it is in terms of acquisition or it is in terms of some alignments which we have done kind of a thing. So we are able to control quality, we are able to control design, and therefore that is a very strong strength which we have acquired. And at the front end, I think today no other player gives a kind of inspiration and experience as we give to the consumer, because we operate through about 31 beautiful home stores which are there today across the country. These are state-of-the-art stores and comparable to any international store which you will find in Singapore, Paris or London. To that extent, it is totally phygital, which has a digital journey which kind of comes in. Visualization is excellent, which is based on 3D and 4D models which are there. And we also offer execution service which is like BHS, which is there to that extent. So I think we are offering the customer right from a very strong product which is manufactured in-house, designed by us, to an experience which is really exemplary, which works out. So I think we are working on everything in terms of what possibly is right in the category.
Sure. Thanks and all the best.
Thank you, sir. We would now request all participants to introduce yourselves with your name and your company name before asking questions. We now have our next caller, Mr. Alok Shah, who is with us via teleconferencing. Mr. Alok Shah.
Thank you, and sir, congrats on a good performance. Sir, my first question is actually an extension to what Tejas had just asked. So my question is, at the current juncture, those hardware stores or PVC pipes, etc. So they would potentially may not be keeping any paint brands, but in that vicinity, you would already have some dealer, etc., who would be servicing the paint, or this is absolutely new geographies that Asian Paints is tapping through this channel. And second question is how is the servicing to this channel of hardware stores, etc., happening in terms of different assortments and the different SKUs that you have?
So I didn't understand the second part of your question. What is the assortment of what they're having at the hardware stores?
No. So the second question was in terms of the servicing, because I understand that they may not be really having the tinting machine, considering maybe the space constraint, etc. So how is it that the servicing, to those stores are happening currently?
So I must say that possibly I think you should take a round of some of the towns and cities to understand how these stores are, first of all. But I think overall, when we look at from a point of view of our distribution strategy, we are very clear that we approach the whole strategy in form of a cluster. So if there is already an existing retailer who's there, we will take care in terms of that we are not really opening someone right next to kind of compete with the retailer to that extent. And therefore, what we clearly said we look at extension of suburbs in the existing cities, newer towns which are kind of coming up, and really look at clear clusters where possibly our customer reach might not be very, very good to that extent. And therefore, we have no problems in terms of looking at possibly a certain reach in terms of what we are able to get. Secondly, these stores are not small. And in fact, if you keep on going deeper into the country, the stores get bigger. The stores are only small in cities like Bombay and Delhi, where the real estate is of a very strong value. As you kind of keep on going in smaller towns, you will find people able to offer you even 2,000 square feet to 3,000 square feet of space, which is available. And the tinting machine doesn't occupy much of a space to that extent. And therefore, we try that with most of our openings, we try to give them tinting machines so that they get a flavor of tinting and they are able to kind of supply to their customers the best of the colors which they can overall open to that extent. And therefore, that's a very, very strong model in terms of looking at opening newer retailers with tinting machines to that extent as they kind of go forward.
Got it. And sir, would there be any numeric target that you can guide us with, maybe in terms of overall dealer or the retail network expansion? Because I understand it's closer to around 150,000. Any medium-term targets that you can share?
So yes, we have about a presence of about 150,000 retail points which are there, and we keep on looking at saying that depending on how the country is expanding, how the demographics are panning out, that we should be able to add anywhere between 5,000 to 8,000 retailing points every year.
Okay. Sure. And so the second question is on the overall dealer incentive structure, etc. Just wanted to check, how has it evolved? Is there any some major changes that have been taken place at the companies and at the competition's end over the last 3-4 years, or it's largely remained the same? Your thoughts on that? That's it. Thank you.
Sorry, what has evolved?
No. The dealer incentive structure, etc.
Okay.
Just wanted to check, are there?
So incentives, I think are incentives at the end of the day. It is the dealers are quite proficient and clever in this. So I think what really matters to them is the per liter kind of a discount. You can give that discount